In today's video, traders, we're going to be building a scalping strategy for the lower time frame, so stay tuned. We're getting into it right now. Welcome back, ladies and gentlemen, to another one of my YouTube videos. Today we're going to be building a scalping strategy for the lower time frames, meant specifically for kind of choppier market environments that are a little bit on the quiet side, right? There's actually some really good opportunities in between major market moves or kind of major market sessions if you're looking for them. And today we're going to build a specific trading strategy meant to kind of take advantage of potential opportunities that lay there. Now, one thing I want to say before we go any further with the video, if this is your first time to the channel, make sure you subscribe down below if you're looking to improve as a trader. I've got all sorts of content waiting for you on my channel to help you out in your trading journey. So let's go ahead and jump into this trading concept today. Again, so I mentioned that we're going to be looking at a trading strategy that is meant specifically for those lower time frames and scalping the market. Now, what I have for you guys specifically today is actually kind of a reversal based scalping strategy meant specifically more for those quiet market environments that you're going to get during maybe the Asian session or even kind of between those major market sessions. You guys may or may not know that the London session, the New York session, and the Asian sessions are the major, market movement times. That's when you're going to get most of your movements, but there's also times in between that are quiet, right? When markets kind of come to a grinding halt. Another one to mention is that sometimes during the summer, things get really, really quiet and really, really slow. Also during Christmas, right? So whether you're watching this video now or in the future, the thing is, there are times when markets get really quiet, but there's some opportunities that come with that if you're looking and if you're able to trade them or you identify that there's potential there. So let's go ahead and jump into the strategy today, guys. What I've got here for you is a scalping strategy. Like I said, again, on those lower time frames, we've got a 15-minute chart here. Looking at the USD JPY currency pair, we've got an idea here on this trading strategy. You can see down below, I've got two indicators here on this chart. I've got an RSI as well as a Bollinger Band on this chart. Now I'm using the standard Bollinger Band, and I'm using if I go into my details on the RSI, you can see it's hidden behind my camera. You can see the RSI period is only 4, so we're using a very, very kind of a quick RSI motion here, as well as here's some more information about the RSI. You can see that the upper band here is at 90 and we're looking at 10 on the lower side. So we're looking for a really, really kind of sharp movements in the market, and we're going to look to potentially fade these moves. Now, why would you want to do that? Why would you want to fight a movement in the market? Well, when you have market environments when things get really, really quiet, a lot of times, maybe even more often than not, what you're going to see is you're going to see markets kind of roll over and they're going to turn back oftentimes when they start to get moving. Now, that's because there's not a lot of energy in the market to keep things going one direction. A lot of times when you have those big market moves, you have big impulses, followed by corrections, followed by massive impulses again, right? And this takes volume. This takes a lot of traders actively pursuing this market, kind of fighting the way up, right? You're going to have bulls who are pushing price higher and higher, but a lot of times when markets get real quiet, we're going to see that things come to a halt, that things don't actually continue. In fact, usually when we get something like this, it usually gets faded, right? And kind of continues lower as opposed to continuing higher and higher. Now, that's not always the case, and I'm not trying to, say that this is a perfect strategy or anything, but let's go ahead and talk about some of the technicals here with what we're going to be doing here on this strategy. You can see, again, we have that RSI here at the bottom, and we have a Bollinger Band up at the top. So with that said, what we're going to be looking for is we're looking for movements in this market that we can potentially fade. Now, what we're going to look for primarily here is two major things. And the first thing that we're going to look for, again, is a move outside of this Bollinger Band. Now, why would we want to look for that? Well, what you can see is that relatively the market here is very quiet. Price is chopping around. It's not very decisive. It's not trending a whole lot. And there's a good chance that anything that gets started is likely to fail. It's likely to kind of pull back. The market's not really active, right? So as this market starts to rally, what we're looking for with this strategy is to look for something to break outside of those standard deviations, meaning that we've, kind of made a big move or a break out of what's normal in the last 20 bars as, using this Bollinger Band, right? So we're looking for something to break that structure, meaning it's going to close outside the Bollinger Band, right? And so what we're going to do next, if I can just pull up my sketch pad, you can see that we've closed outside the Bollinger Band, right? So we've made that major movement to the long side. We've seen price break and close above this Bollinger Band here. And we also have something interesting down here. Check this out. You can see that at the very same time, we have an RSI break of that 90, that 90 reading that we talked about, right? Here's our barrier, or 90 is right around this area. So we've broken above that on this candle, which is a significant movement, right? So we've broken, the relative strength index is pointing that things are really, really overbought. And the Bollinger Band is also pointing that price is breaking to the high side. Now, I don't advocate or want to make it seem like things are going to be perfect, that you're going to just make easy money off of some sort of indicator system. What do we do to get to this trade? Well, we identified that the market overall is in a quiet state, right? Things are choppy. Things are not very, very decisive here. And so we're using those indicators as just tools. So we have those price movements. We have price rallying to the high side. We see it's overextended to the top side here, as well as in the RSI. And how could we trade this back to normal? Well, this is what we're going to do. And I'm going to pull up my sketchpad one more time. Here's where we're going to target with this trade. We've identified price closed outside. We're going to go short here, right? We're going to short this market, and we're going to target this moving average. Okay, you can see the moving average here is going to be the 20 period, because we're using the Bollinger Bands, right? The standard Bollinger Bands are going to have a 20 period moving average as that center piece. So as price comes down into this area, you can see we have a potential opportunity to short this market back down towards this moving average. And where would we close it? Well, we could potentially close our trade right around that moving average. Now, what you can see is that this happens again and again in markets, especially when things are quiet. Here's another potential example, except we didn't get what we were looking for in the RSI, right? We didn't see that RSI reading come into play. So this trade wouldn't have been valid, but you can see there's plenty of opportunities where this will happen in the market. You can see, here's another example here. We have actually a couple examples that we can talk about right here. So again, we're still in the context of a sideways, choppy market environment. That's exactly what we're looking for. This is a lower time frame. We're looking just to get in and out of trades here as scalpers. And what we're going to see here is that we have another opportunity to go short potentially right here, right? So again, remember, markets are quiet here. Markets are choppy. We're looking to continue that choppiness. We're looking to take advantage of the fact that there's a good chance that markets won't rally. They won't continue, right? Because things have been so quiet. So in this case, what could we have done? Well, we could have identified that price closed here. On the very next bar, we could have gotten short, right? Let's put a sell in there. And we could have targeted in one bar, we would have had our nice little take profit hit. You can see price quickly came down into that line here that we identified, which is that moving average, and we had a nice little trade there relatively quickly. Now, additionally, we also had that relative strength index here to line up with our trade, giving us kind of two factors on something here. Now, one more thing that I do want to mention here, just as a side note, something that you could add on to in this strategy is check this out. We actually also have a level of resistance here in this market at the very same time. So remember, price action is always very, very important. At least in most of my trading strategies, I incorporate some sort of price action. But what you can see is that sellers were coming into this market here along the way. So that's just another added confluence to kind of aid our trading strategy here, right? So we could combine the fact that we have that RSI reading, we have a sideways choppy market, we have that overbought, in terms of breaking through that, Bollinger Band movement, and we could have taken a nice little short there that would have gotten us a nice little quick movement back down. Now, what you can see relatively quickly after that, I'm just gonna scroll over just a little bit. You can see that we had a nice little trade again here in this market. So we've had a couple trades already on this. Now, what about this one right here? Well, here we can see that price just, let's go ahead and make this black. You can see price just barely made it above that RSI and also closed above right here. Now, we didn't get an immediate profit. It wasn't an instantaneous profit, but you can see if we had taken a short position right here, we could have shorted in this market, targeting that pullback to that moving average. And you can see we got it right there. Not a massive winner, but still a winner nonetheless. You had to wait on it for just a little bit, but you can see these are only 15-minute candles, so price would have ultimately closed for a nice little profit there in this case again. Now, it's not going to be perfect, right? You're going to have times where markets decide to start moving again, and then you're going to have to take losses. Where could we set a stop loss? Well, with this particular strategy, when it comes to scalping, stop losses are tricky, right? Because stop losses when it comes to scalping is you're going to have spreads kind of being in the way, right? When you're trading those shorter time frames, spread actually gets to be a lot more important, right? So let's say in this trade, right, we're only looking for, what is that? Only about 3 pips, right? Very quick movement, taking advantage. These are trades that you could be in and out of, right? But the thing is, those spreads are going to come into play. So let's say you got you got filled for 1 pip, well, suddenly your spread is going to be more significant. So with a stop loss, it's kind of open to interpretation. You can trade it how you want. This is how I would personally trade it. I would look to trade it without a stop loss and find some other way to get out of the trade if it decides to continue. Let's say that you put some sort of strategy to get out. Let's say if price closes 3 times in a row above the Bollinger Band, then you close out of the trade for a loss, right? That's just an example. Let's say that you could say if price closed here, let's say instead of coming down, what we saw is we saw another bar higher and we saw another bar higher. Well, we could have just closed out the trade like that. That's just an example of a dynamic exit that doesn't use a stop loss. Again, because when you have these market environments where spread is going to be significant, you don't want to necessarily use a super tight stop loss because you're just going to get whipped out of the trade constantly. So just something to think about with that. Again, kind of a simple strategy, kind of just a concept that you can use in the context of a sideways market environment. And remember, price action is still something that's extremely valuable. You can see that price action in this case was very, very helpful in helping, kind of find those key levels to talk about, to kind of potentially act as targets, potentially act as levels of interest, right, to get into trades. So all of those things kind of come into play. But guys, I just wanted to share this with you. This is just a strategy that I've been playing around with and looking at, so I wanted to share it here on the channel. Guys, thank you so much for all of your attention here on the channel. If you made it to the end, I do appreciate it. I've also got some videos here for you that I'm going to pop up on the screen. You can check out and continue the conversation there. Thanks, and we'll see you in the next one.